Let's move on now. Speaking of the lending space, let's actually talk to a different company. Aadhar Housing is in focus. The numbers came out. Net interest income and disbursements came in at a healthy growth rate. Assets under management also surged by over 20% on a year-on-year basis. To talk about the outlook for the business, we have Rishi Anand, Managing Director and Chief Executive Officer at Aadhar Housing Finance, with us. Rishi, thank you so much for being with us. So let's start by looking at the AUM growth, the growth in disbursements as well as the AUM. That looks pretty healthy. I mean, disbursements were up about almost 20% year on year. AUM, even sequentially, is up about 6.3%. So just tell us how you're looking at the growth trends and what's the anticipation for this year? By how much do you think you can grow the book?
Thank you so much, Sonia. Good morning to all of you, Prashant, Nigel, and Sonia. Thank you for having us back.
This is Surabhi, sir. Prashant is missing in action today. But yes, Surabhi, Sonia, and Nigel are very much here.
Good morning, Surabhi, also. The team has done a wonderful job. The results are out yesterday. YOY 23-24, disbursement 20% up, AUM 23% up, profits 33% up. On a sequential basis, you are right, disbursements are 25% up, AUM 6% up. That's how it has panned. On a quarter-on-quarter YOY basis also, disbursements are about 12% up, 23% AUM, and a PAT of about 25-26% up. With respect to giving any guidance, I would rather take you back to how we performed over the past 2 years. Past 2 years have been in the range of about 20% growth on disbursements and about 23-24% on AUM. I don't see any reason why we should not be able to maintain these matrices.
Okay, got it. But I think the reason my colleague Surabhi was asking you the question, and this is Sonia here. Hi, good morning.
Hi,
is because,
Sonia,
the affordable housing segment, which you cater to, has been seeing a bit of a slowdown, largely because of the recovery in Tier 3, Tier 2, even rural, right? Has taken longer than perhaps what was expected. Do you see any kind of hindrance over there? And just in terms of, you can't give us quantitative numbers, but in terms of qualitative moves, what are you expecting from this segment?
One, I would wish to clarify that we don't serve the rural segment at all. What we serve is semi-urban and urban locations. And I don't see any reason why, industry data would show a shortfall on the growth here, because the way we look at it in the segment that we cater to, there is more than sufficient demand. And I remember quoting one RBI report in every forum that I go to, which was published by RBI in 2019, which shows a total unit shortfall of 10 crore units in the country, out of which 9.5 crore happens to be in the EWH LIG segment, which is the segment I cater to. And if I translate that into housing loan requirement, then we're talking about a huge number of 35 trillion. So I don't see any reason why there should be a dip or why people are talking about a dip. On the other side, there are too many government initiatives that have been taken, right from PMAY subsidies to giving GST benefits to giving registration benefits to consumers. So for us, we've recorded good growth in the past couple of years, and I don't see any reason why there should be a dip in numbers or in demand for the matter.
All right. Hi, Rishi. Morning, and good to see you. And Nigel on this side. What about the NIMs? Could you tell us how is the incremental cost of funds in comparison to what you have incurred in the past? And what does it mean in terms of NIMs? You raised some money as well sometime during the last fiscal. Please go ahead.
Yes, in terms of NIMs, Nigel, we're very comfortable. Last year, if I can quote some numbers, last year FY23 we were 8% NIMs. Today we stand at about 9% NIMs FY24. Cost of fund, if I were to look at, there has been a slight surge about 1%. The exit cost for FY23 was 7.1. FY24 is 8.4%. So yes, there has been an upsurge on cost of fund. But the way we look at our business is, are we able to maintain our spreads? Our spreads are quite healthy, and the exit spreads that we posted is 6.2%. And if you recall our last interaction and discussion, we had indicated that the management is very comfortable maintaining anywhere between 5.7 to 5.9 kind of spreads. So we are in the good space, so-called, right now.
Just to repeat the numbers, sir, you mentioned that FY24 net interest margin was 9%. Is that right?
That's right.
And Q4?
Q4 FY24 is 9.3%.
net interest margin at 9.3%. And how does the 9% for FY24 compare with the previous year? And then,
So,
I mean, an outlook, if you can still hold on to a level like 9% then for the current year.
Okay, the previous year exit FY23 was 8% and FY24 to repeat is 9%.
Okay, so just some, thoughts on this. What makes you confident that you can hold on to these levels? I mean, sure, overall in the market, there are expectations of lower rates, maybe rate cuts as well, and lower yields. That's the market dynamic. But otherwise, how do you have the confidence of maintaining at least 9% for this year as well? And what's the expectation on cost of funds?
So the way we look at NIMS is it's an output of the spreads that we will be able to maintain. And as I indicated, a steady state spreads of 5.5, 5.7 to 5.9% is what we will be able to maintain. And historically, we've maintained slightly higher, but as we go ahead, the management feels that 5.5 to 5.7 we can maintain. If we are able to maintain that spread, which we are very confident, then I would, from a perspective of future, I would indicate that anywhere anywhere between 8 to 8.5 kind of NIM should be very comfortable.
Okay, 8 to 8.5%. Got it. Thanks a lot for joining in. Appreciate your time here on CNBC TV 18.